This is Ryan Edner with your Tuesday, August 20th morning wake-up call. We are looking at good to excellent ratings here this morning that remain the same for corn at 67% and also the same for beans at 60. Now, while this sounds like a neutral influence here, that is actually strong because the 5-year average shows that typically this time of year, good to excellent ratings fall. So what seems to be neutral by leaving the numbers alone actually makes the crop look a little bit stronger. Another influence for a little bit of overnight weakness last night was to see that the 6 to 10 day weather maps added a little bit of rain back into the forecast late in the 10-day forecast. Now, we would say that possibly weather's getting a little bit late for a major influence, but yesterday did see a significant bounce led by the beans on the forecast maps that changed much warmer and much drier on Sunday night, Monday morning. So apparently trade is still watching weather maps, although we do expect each day that goes by, weather maps have a little bit less influence right to the end of the month. Also, we want to point out that open interest fell 18,000 in corn. Puts a hint out there that perhaps we're seeing some fund short covering again after taking most of last week off. They may have been back in here short covering corn yesterday. Now, the big question here for these grains is, where do we find resistance? We already know we've seen corn bounce multiple times and seen cash selling step in on a large scale at any level over $4. But for beans, we have yet to see a significant bounce at all. So we're not exactly sure where to expect cash selling to step in. If we were to take a first guess, the obvious guess would be the round number of $10 or perhaps just under $10. When we do see a further bean bounce, we will find out what that level is. But for now, we know in corn it's just over $4, and for beans we're anticipating will be close to $10. The wheat news is very quiet. Overseas was unchanged last night, so the overnight wheat trade was also calm. Most part, wheat has just been hanging around lows, but not really making new lows. And there isn't really much news. This is why wheat is following overseas so much, because the only news wheat has to talk about at this time of year would be exports. And for the most part, exports remain neutral. Flipping over to the cattle, the average cash trade yesterday was a little bit better than most would have expected. It was down $1.61. It's likely that most in trade anticipated that average cash trade would be down $3. So not quite as bad there as expected. That offered some support yesterday. Also seeing support was from the fact that the show list came in down 13,000. Now, we did see box beef go down $1.90 choice and down 58 cents select yesterday, but even on that setback, that keeps packer profits coming into this week just over $10, and just over $10 is still a solid number for this year and better than we have seen in most weeks. So even with the slight box beef pullback yesterday, there is still reason to anticipate a higher cash trade, and we will say the futures are still priced around $2 under cash. So again, if we get just simply a $1 higher cash trade, we could see $2 or $3 futures bounce is possible, especially if box beef can remain sideways or look higher. So that's what we have here today. If you have any questions, you can give me a call direct at 815-578-6159 and continue tuning in to the Morning Wake Up Calls.